What is a central bank? A central bank is the primary monetary institution in a country responsible for overseeing monetary policy and regulating the functioning of other banks. While central banks operate similarly to regular banks, their key difference lies in lending to financial institutions rather than individuals and having the authority to print currency. They are non-commercial entities that don't interact directly with the public, but their ultimate aim is to promote consumer spending and saving. Central banks possess the exclusive authority to print currency, and any money they issue is backed by the institution, making it legally acceptable as a form of payment throughout the country. This ensures that any mode of payment authorized by the central bank cannot be rejected. One of the most important roles of a central bank is regulating the financial sector. It performs several critical functions. First, as the sole issuer of currency, the central bank controls money printing, which is done against the country's gold reserves. This must be carefully managed to prevent inflation, which can severely damage the economy. Another key function is regulating monetary policy. Central banks control the money supply through open market operations, such as buying and selling government bonds, to influence interest rates and liquidity in the market. By selling bonds, the central bank reduces the cash supply, whereas buying bonds increases the money in circulation. Central banks also oversee commercial banks by setting reserve ratios, ensuring banks maintain adequate capital. They serve as the lender of last resort, offering loans to banks at the repo rate. The reverse repo rate is the interest rate commercial banks receive when lending to the central bank. Additionally, central banks manage foreign exchange reserves, which stabilize currency exchange rates and influence inflation by devaluing or revaluing the domestic currency. The concept of central banking began with Sweden's Riskbank in the 17th century, evolving from private institutions that funded government debt to modern central banks that regulate broader economic factors like inflation and monetary expansion.